Hey everyone, welcome back to Matt's Investing Corner. Today we're diving into a giant of the energy world, Petrobras. Petrobras is Brazil's state-backed oil and gas powerhouse, and it matters because it's one of the biggest offshore oil and gas producers. I am going to show you their latest Q3 earnings, take a look at how their strategy expansion plans could reshape their future, review their dividend policy, and review how their stock price is moving in tandem with the oil price. I'll do a quick chart walkthrough to highlight what stands out to me before I wrap it all up. So if you're curious whether Petrobras deserves a spot into your portfolio, then stick around and let's jump right in. So let me first start by explaining Petrobras' management strategy for the next upcoming 5 years. 1. Extract the most valuable oil and gas fields, and especially pre-salt, to keep cash flowing. Most investments is going into the most profitable offshore fields, especially the pre-salt, and there are quite some around the coast of Brazil, where the oil is high quality and relatively low cost to produce. Another thing is that what they're doing on that point is that they're building new FPSOs. What are FPSOs? New floating production and storage operating units, and the projects are meant to grow and then hold production around a plateau of 2.6-2.7 million barrels per day, so cash generation stays strong for several years. The second point that they're trying to do is to upgrade and integrate refineries in Brazil to squeeze more margin out of their barrel. Management is spending big on modernizing and integrating refineries and related infrastructure, so they can produce more high-value fuels like low-sulfur diesel and jet fuel. The goal is to keep more of the value chain inside Petrobras Brazil, from production to refining and to sales, which should stabilize the margins and reduce dependencies on the imports. The third point is use today's oil cash to slowly build tomorrow's low-carbon business, but only where it's profitable. Around mid-teens percentage of capex in the 2025-29 window is earmarked for energy transition. Projects like biofuels, ethanol, biodiesel, SAF, biobunker, biomethane, gas and power, and decarbonizing existing operations. The official line is oil and gas remains the cash cow, but some of the money is deliberately reinvested into a low carbon areas that can stand on their own economically and keep Petrobras relevant beyond pure oil. Number 4 is keep the balance sheet solid and still pay hefty but normal dividends. The formal dividend policy says if debt is under a set ceiling and results are positive, Petrobras aims to pay 45% of free cash flow to shareholders, which is enormous, and this makes this company extremely attractive for shareholders as a dividend player. In the latest 5-year plan, management guides to roughly 45 to 50 billion of US dollars ordinary dividends for the 2026 to 2030, while trimming capex slightly to match a lower oil price outlook. This is basically, we will still pay you a lot, but not blow the balance sheet. Number 5 is run the company safer, cleaner and leaner to protect its license to operate at lower risks. The strategically drivers explicitly talk about safety, integrity, ESG and a fair energy transition, including cutting emissions, supporting local industrial development and keeping a tight focus on profitable assets. For shareholders, this is about reducing political, environmental and accident risk, fines, shutdowns and reputational hits, while using the technology and operational efficiency to keep units cost down over time. So quick summary. Strategy of Petrobras management for the next 5 years. Milk the best oil and gas fields, especially pre-salt, to keep cash flowing. Upgrade and integrate refineries in Brazil to squeeze more margin out of each barrel. Use today's oil cash to slowly build tomorrow's low-carbon business, but only when it's profitable. Keep the balance sheet solid and still pay substantial dividends. Last but not least, run the company safer, cleaner and leaner to protect its license to operate and to lower risks. Next, I would like to deep dive into the Q3 earnings of 25 from Petrobras. When they publish their earnings, they give a performance report, they give a productions and sales report, and they make a presentation for the webcast. For each stock that I'm following, I keep all the records nicely neat and captured so I can review them accordingly. So here you can see for Petrobras the same. And let's go over these numbers in more detail for each of the parameters. The first one is EBITDA. EBITDA was showcasing 11.7 US billion. And that means that there was a quarter over quarter a plus of 2.5. If you compare that year over year, there was a jump of 0.2 billion plus. If we go to the sales revenue, we can see that the quarter over quarter there's a jump of 2.4 to 23.5. Whereas year over year, there's not much difference. It's like 0.14 billion plus. So all in all, still very positive because the EBITDA and the sales revenue is going up. If we look at the net revenue, net income, we can see that the quarterly results were net income in US billion were 6.0. If we look at that quarter over quarter, there's a jump up of 1.3 billion, which is significant. If you compare that year over year, and we look at the 24 number, 5.9 to 6, that's a plus of 0.1 billion. All in all, also positive. The gross debt, we can see that if we look at the entire curve, is that this is ramping up. The debt is basically reaching now a level of 70.7 US billion with a quarter over quarter a plus of 2.7. If we look at that year over year, we can see a difference of 11.6 billion of additional debt over a year that has increased for this company. If we look at the capex, we can see that the cost of expenditure has increased quarter over quarter from 4.4 to 5.5. So that's 1.1 billion extra. Year over year, you can see additionally a jump of 1.1 the same. So there's more cost being made. They're having bigger debt. And they are increasing a bit their EBITDA and their revenue, but this is going in at the cost of more and more investments. If we look at their gross profit, we can see 11.2. Compared to the last 3 quarters, they're basically having a plus quarter over quarter of 1.2. Year over year, they are having a loss of 0.8, excuse me. Which basically shows that the gross profit year over year is actually declining. And I think the next graph will explain a lot. Here we are seeing, I need to make it a bit smaller to clearly show that, is the total production of oil and natural gas in million barrels equivalent per day. And I'm combining as well the Brent crude price. So what we're seeing here is the blue line is the total production of oil and natural gas that reached new highs, 3.144 million barrels per day. If you see that in comparing this in the last 8 or 10 quarters, they did not reach such a level yet. They're having enormous output. However, what we're seeing in the same picture is a decline of the oil price, whereas in 23 and 24, we could see an oil price of 86, 84, 83. In 24 and 25, the oil price started to decline. And that started in Q1 25 already at 75, Q2 to 67, and Q3 the oil price was 69. So what happens? You get less money for your barrel, but you're pumping more oil out, and this is basically what is happening. Well, the revenue has increased, but that's mainly because they just pumped out more and more oil at a lower price compared to 1 or 2 years ago. So this is explaining a lot. And if we look at the oil price for the last quarter, Q4, we will see that if we go to another screen, here if I look at the trading economics Brent crude oil price, and I look at the October, November, December, and obviously December we're not fully priced in yet. We're still in the beginning of December. But if we look at the beginning of October, where Q4 basically starts, we look at prices that are in the range of of 64, 61, 63, 62. So let's take an average. We're seeing on average currently a Brent crude oil price of $63. So that's exactly what I've done here in this graph as well. I've already drawn a line of the oil price of Brent crude, putting it at 63. If you see that the average price in Q3 was 69, Q2 was 67. So what will that mean? Well, that means that for all the oil that is being pumped out, even more than previous quarters, they will get a lower price for the products and their crude that they will basically extract. Petrobras is known for its high dividend. And earlier this year I made a video whereby in previous year and beginning of this year the dividend was around 16% dividend. However, Petrobras is not able to keep up with that. They are increasing their volume of output in barrels. However, the oil price is dropping and thereby they cannot maintain such a high dividend payout. And that's exactly what currently is being announced as well. 28th of November via Reuters, I could see that Petrobras is cutting dividends. They initially were aiming to pay out to shareholders in the 2030 an amount of around $55 billion. However, they are revising this number now. The number of what they will be paying out will be in the range between 45 and 50 billion. So that's a reduction of 10 billion over the period of 5 years. So that's something that is just something that we need to take into account. The high double-digit dividends are no longer going to happen anytime soon. And if I look at the investing.com, where I look at the share, you can nicely see how the dividend has been dropping basically over time. So here you can see in May 24, the dividends was still around 16%, August 16%. In March this year actually, we were reaching up to 20% with that payment. However, if you look at the last couple of months, in August and December, we will see that the dividend is going to drop tremendously from 16, 15, 13 to 8 to 9%. So that's something you need to take into account. 9% is still a high amount of dividend that you can get. However, it's no longer the double-digit dividend that you were expecting in the past. So let's have a look at the share price of where Petrobras ADR is currently priced in. Currently, it's being priced close to $13 on the first day while I'm recording this. And what the share price has been doing over the last couple of months since May this year is basically it's been bouncing up and down between particular levels. And what you can see on the purple line, I connected some tops on the higher end and I connected some of the lows as well on the lower end. And what you can see is that it's basically bouncing up and down and up and down and up and down between this particular range. And that means that it's just moving sidewards. Sidewards is perfectly fine for me because I don't need a stock that just breaks and breaks. It would be nice, but however, if it's a predictable pattern, there's a nice way to make some money on this as well. So what that means, so I am looking at levels of 12 or 12.20 or even lower, then I would be buying. And if I can then have a position in that, and then later on, if it's 12.5 or 13, I would be selling this again. So this is something that is ideal for me to use that as a sort of guinea pig. The moment I have some cash and I see that the share price of Petrobras is around 12 and lower, I would be buying. This is my guinea pig to basically rack up the 9% dividend. But in the meantime, if I can make $0.50 or $1 even with the stock bouncing between these levels, it's nice to have that in the pocket. What you need to take into account, obviously, this is directly related to the oil price. So if there's a lot of turbulence on the oil price or lack of demand, and especially when there are big issues or wars or conflicts going to happen, I'm thinking potentially of Venezuela, then if suddenly there would be a huge supply stopping into the world demand, then obviously this can have an impact on the oil price and thereby on oil companies. And quite often what you will see at that such a moment, that the oil price starts to peak, and also the oil related companies start to peak as well. So it could well be that if such a thing happens, that suddenly you see a breakout out of this trend line of 13.5 and we go to higher levels. However, for the time being, this is how the stock is currently moving in my eyes, and I believe it's a very nice one to just passively keep it, buy it at lower ends, and sell it when I can lock in $0.50 in between the time. So all in all, I've showed you Petrobras and the 5 strategy growth pillars for the next 5 years. If you are interested in that in more detail, I'm basically showing you here the presentation that basically explains the business plan for 25-29 for the next 5 years. So Petrobras, they are investing more and more in offshore deep sea drilling. And this is something that they are doing with floating production storage operating units, and they're building more and more of these so that they can keep up with the enormous request of oil. And what you can also see in the results is that the output is increasing to record new highs. However, the oil price is dropping. So in order to keep up the same cash levels, they need to pump out much more oil against lower oil prices. And this is currently happening. If I look at the last quarter, in this quarter that we're now in, the prices of oil are dropping compared to the previous quarters. So they will have to pump more and more oil out to stay at the same cash levels. On the dividend side, Petrobras already decided to revise their policy. They're no longer giving double-digit dividends. We need to take into account that the dividend will be in the range of 8, 9, 10%, which is fine for me. On the price movement, I can see that the share price is moving sideways. It's moving between 13.5 and less than $12. And that's fine for me. For me, this is an ideal way to store sometimes my money in, and then to just lock in a small profit, even though it's 20 cents, 50 cents, or sometimes $1. And that's perfect for me. So you don't always need to have a stock that goes through new highs. If this stock is just moving sideways in this pattern, you can make a lot of money. So this is something that I'm very curious to hear your thoughts. What is your opinion about this company? Do you see this as a long-term investment? Do you see the dividend recovering anytime soon? I am very curious to see your comments. Please leave a like, a subscribe, or just a comment, and then we can interact on that on the channel. I'm very active on that, and I hope you enjoyed this episode, and hope to see you on the next one. Take care. Bye-bye.